Hello viewers, welcome to my channel. I'm Hasham. So now I'm continuing the problems on ratio analysis. Already 15 short problems I have completed till the last video. One more short problem, 16th problem I am going to do in this video. After that I will start the main problems on ratio analysis. So after doing 15 problems, I hope that students got some command on the problems of ratio analysis. So without understanding the concept, without remembering the formula, don't come and watch this video. First, it is compulsory that you must know what do you mean by ratio, what are the advantages of ratios, limitations of ratios, classification of ratios, and then you have to remember what are the formulas for each of the ratio. Then only you can be able to understand these problems. So my suggestion to you, watch the first 2-3 videos. It's very compulsory. If you have not watched, I suggest you to go to the playlist of my channel, select the subject financial statement analysis, select the topic ratio analysis. Watch the first, second, third video. You will get confidence, you will get more command. Then you can come and watch this video. You will enjoy learning, you can be able to remember. Now I'm going to start the 16th short problem, but before that I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a printout and keep it ready before start watching this video. Now 16th problem. This is the last and final short problem. Given current ratio 2.5, liquid ratio 1.5. Liquid ratio means quick ratio 1.5. Working capital 60,000. I told you in the previous video, working capital means current asset minus current liability. 60,000. Bank overdraft 10,000. That is one of the current liability. Then calculate as many details as possible. It is not specifically asking you that this is the item you have to calculate. It is asking you calculate whatever maximum what you can be able to calculate from this information. Now first of all, current ratio is given 2.5. Liquid ratio is quick ratio. Quick ratio is given 1.5. Working capital 60,000. Bank overdraft 10,000. This is the information given. First, I will use the working capital. How much working capital is given? 60,000. Working capital 60,000. What is the formula for working capital? CA minus CL. Current asset minus current liability. CA minus CL is equal to 60,000. Keep CA on LHS. Left hand side, keep the CA and bring the CL to RHS. So minus CL will become plus CL. So the equation will be CA is equal to 60,000 plus CL. One equation we got. Current asset is equal to 60,000 plus current liability. This is the equation we got it. Now we'll make use of the first ratio, current ratio. How much current ratio is given? 2.5. So current ratio is equal to 2.5. What is the formula for current ratio? CA by CL, current asset by current liability. Already so many problems we have applied this formula. So CA, numerator is CA. In place of CA, I can substitute the equation. What is that equation? CA is equal to 60,000 plus CL. So in place of CA, I am writing 60,000 plus CL. Divide by CL is equal to 2.5. Now here I can make the cross multiplication like this. Cross multiplication if I make, then 2.5, this one. 2.5 2.5 into CL is 2.5 CL is equal to 60,000 plus CL into 1, 60,000 plus CL. Now bring this CL from RHS to LHS. So plus CL will become minus CL is equal to 60,000. So 2.5 CL minus CL. CL means 1 CL. So 2.5 minus 1, you will get 1.5. So 1.5 CL is equal to 60,000. Now bring this 1.5 to RHS. It will be divided because there is multiplication here. 1.5 into CL. So if we change this side, it will become division. 60,000 divided by 1.5, 40,000. So current liability 40,000, one item we got. Now easily I can find the current asset because I have the equation. Current asset is equal to 60,000 plus CL. So 60,000 plus CL. CL is 40,000. 60 plus 40, 1 lakh. So we got current asset 1 lakh, current liability 40,000. Two items we got. Now I'll make use the liquid ratio. Liquid ratio means quick ratio. So quick ratio is 1.5. What is the formula for quick ratio? QA by CL. QA by CL, quick asset by current liability. What is the current liability? Actually, there is a controversy regarding the formula for quick ratio. Some author says quick asset by quick liability, but majority of authors says quick asset by current liability. So that's why I'm taking current liability. Otherwise, some of the authors says we should not take current liability. From current liability, deduct the bank overdraft. Bank overdraft, deduct it. So current liability we got 40,000 minus bank overdraft 10,000, 30,000 you should take quick liability. But I prefer the majority of authors. They says current liability. So current liability 40,000. 40,000 into 1.5 is 60,000. What is the 60,000 quick asset or liquid assets? So 3 items I have calculated in this problem. First, current liability I have calculated, current asset I have calculated, and quick asset I have calculated. One more item I can be able to calculate: stock. Stock is CA minus QA, because already we know quick asset is equal to current asset minus stock. Quick asset is equal to current asset minus stock. If I take the stock to LHS, minus stock will become plus stock. Then take this QA to RHS, minus QA. Plus QA will become minus QA. So stock is equal to current asset minus quick asset. So how much current asset I got? 1 lakh. How much quick asset? 60,000. So 1 lakh minus 60,000, 40,000 is the stock. That's all. So this is the end of problem number 16. And 16 are the total number of short problems I have completed. Now I am coming to the main problems. First main problem you see. First and second problem are logical problems. No calculations. Only logically you have to think. So carefully listen my lecture, you can be able to understand. First one, the current assets and current liability of A Limited as on 31st March 1994 were 16 lakh and 8 lakh respectively. Current assets 16 lakh and current liability 8 lakhs. So 16 divided by 8, 2:1. That means presently the current ratio is 2:1. 16 lakh divided by 8 lakh. Now, what is the effect of each of the following transaction individually and totally on the current ratio of the company? Now, one by one items are given, 4 items are given. In each item, you have to give the conclusion. What is the effect of this transaction on the current ratio, individually and totally? Now, first item, current asset 16 lakh, current liability 8 lakh. The first transaction is purchase of new machinery 5 lakh. Purchase of new machinery 5 lakh. That means what is the entry when machinery is purchased? Machinery account debtor to cash, assuming that cash is paid. It has not specified whether machine is purchased on credit or cash. Nothing is given. So we are making the assumption that machine is purchased for cash. So entry will be machinery account debtor to cash. Machinery is a fixed asset. Cash is a current asset. So cash is going out. Cash is going out. When cash goes out, our current asset will decrease. So individually, what is the effect? The current asset will decrease. So purchasing an asset. What is the value of the asset given in the problem? 5 lakh. 5 lakh rupees is the value of the machine. So our current asset is decreasing by 5 lakh. What is the earlier current asset now? 16 lakh. Out of 16 lakh, we are paying 5 lakh. So remaining current asset will be 11 lakh. So assuming machinery is purchased by paying cash, so current asset will decrease by 5 lakh. Our cash is going out. So 16 lakh minus 5 lakh, 11 lakh. No change in current liability. The effect of purchasing the machinery is only machinery comes in, cash goes out. Machinery is a fixed asset, so it will not affect the current asset or current liability. Keep it aside. Cash is going out, so our current asset will decrease. So 5 lakh rupees decrease, so 11 lakh rupees is the current asset. New current ratio will be CA by CL, 11 lakh rupees divided by 8 lakh. Current liability is 8 lakh, no change. So 11 divided by 8, 1.375. 1.375 is the new current ratio. What is the old current ratio? 2:1. Present current ratio 16 lakh by 8 lakh, 2:1. So presently 2:1. By conducting this transaction, it is coming down to 1.375. So conclusion, by purchasing a machinery of rupees 5 lakh in cash, the current ratio is decreasing from present to 1.375. That's it. This is the explanation of the first. Second, purchase of new machinery of rupees 10 lakh on a medium term loan from the bank with 20% margin. 10 lakh rupees machine is purchased. The machine account data. Machine is debited, but machine is a fixed asset. It will not affect the current asset, current liability or current ratio. Leave it. 10 lakh rupees machine is purchased by taking a medium term loan, not a short term. If short term loan is there, it will affect the current liability. It's a medium term loan, so it will not affect the current liability. It will not affect the current liability. But 20% margin. 20% margin means banker is giving the loan for 80%. Remaining 20% we have to pay. So 10 lakh rupees is the purchase price of the machine. 20% is our contribution. Margin 20%. So 20% of 10 lakh, 2 lakh rupees. So there is a decrease in cash by 2 lakh. When cash is decreased by 2 lakh, our current asset will decrease by 2 lakh. No effect on current liability. What is the present current asset? 16 lakh. Out of 16 lakh, we are paying 2 lakh. So 16 minus 2, 14 lakh rupees is the new current asset. The current liability remains same, 8 lakh. So here purchase of new machinery and medium term loan will not affect current asset and current liability. However, 20% margin, that is 20% of 10 lakh, 2 lakh rupees will decrease from current asset. 2 lakh rupees is going out. So current asset will decrease. So new current asset 16 lakh minus 2 lakh, 14 lakh rupees is the new current asset. So what is the new ratio? 14 lakh by 8 lakh, 1.75. So presently the current ratio 2:1. Now it is becoming 1.75. Now on account of this transaction, the current ratio is declining. Next, third one. Payment of a dividend of 2 lakh rupees, of which 47,000 was deducted at source. Tax deducted at source. So when a company pays the dividend, there is a provision that the company must deduct TDS and the net amount should be paid as dividend. So 2 lakh rupees was the dividend, out of which 47,000 is TDS. Deduct TDS, then the company will make the payment 2 lakh minus 47,000, 1,53,000. When dividend is paid, that means cash is going out. Cash is going out. So when cash goes out, our current asset will decrease. So out of 16 lakh rupees current asset minus 1,53,000. So here net payment of dividend is 1,50,000, will decrease the current asset. New current asset 16 lakh minus 153, 14,47,000 is the new current asset. So new current ratio 14,47,000 divided by 8 lakh, 1.81. So presently we are having 2:1. Present current ratio is 2:1. New current ratio is 1.81. So it will decrease. Due to conducting this transaction, the current ratio will decrease. Last one. Material purchased for rupees 5 lakh, in respect of which bank financed 3 lakh. Now carefully you see. Material purchased 5 lakh, of which the banker has financed 3 lakh. That means how much we have paid cash? 2 lakh. Total material purchased. Remember, material is a stock. So stock will increase means current asset will increase. When we purchase material, our stock will increase by 5 lakh. Our current asset will increase by 5 lakh. Current asset will increase by 5 lakh. At the same time, we are paying in cash 2 lakh rupees. We are paying in cash 2 lakh rupees. So 5 lakh rupees increased and 2 lakh rupees decreased in current asset. So stock will increase by 5 lakh. So current asset will increase by 5 lakh. However, cash is to be paid for 2 lakh. Hence current asset will decrease. So new current asset will be 16 lakh plus 5 lakh minus 2 lakh. So 19 lakh rupees will be the new current asset. Now what is the new current liability? Bank financed rupees 3 lakh for material purchase. So it is assumed to be short term loan. Normally when the bank has financed, we have to see whether it is financed for fixed asset or current asset. If the banker has financed for fixed asset, it will be assumed as a long-term loan. Because a business will take long-term loan to purchase fixed asset. Whereas when the business takes a loan for purchasing material, it's a short-term loan. The short-term loan is a current liability. So when the business has taken a loan for purchasing material, it's a short-term loan. The current liability will increase by 3 lakh. New current liability is 8 lakh plus 3 lakh, 11 lakh. The new current liability, 11 lakh. So what is the new current ratio? 19 lakh by 11 lakh, 1.73. So again, present current ratio is 2:1. New current ratio is 1.73. So we can conclude, due to this transaction, our current ratio has decreased from 2 to 1.73. That's all. So this is the end of problem number 1. In this problem, no calculation. Simply you have to think, you have to see about the logic. Current ratio depends on current asset and current liability. So every transaction you see what is the effect on current asset and what is the effect on current liability. That's it. Now second main problem. This is again a logical problem, no calculation. Simply apply your logic. The current ratio of a company is 2:1. 2:1. Which of the following suggestions would improve the ratio, which would reduce it, and which would not change it? The 5 transactions are given. Each of the transaction you have to give the conclusion whether current ratio will increase or decrease or no change. So presently current ratio is 2:1. That means current assets are double the current liabilities. Each one by one we'll see. So the present current ratio is 2:1. So suppose our present current assets are 2000. Then current liability will be 1000 because 2:1 ratio is there, double. So we assume, to better understand the problem, we assume that current assets are 2000, current liability is 1000 at the present. Then what is the first transaction? To pay a current liability. If we pay a current liability, what will be the effect on the current ratio? Will it improve? Will it change? Will it decrease or no change at all? We have to see. So let the present current asset be 2000 and current liability be 1000. First of all, we will make an assumption. Assumption, presently, without making all these changes, our current assets 2000, current liability 1000. Let us assume a current liability of 500 is paid. Here we are saying to pay a current liability. To pay a current liability, how much it is not given, we will make our assumption. 500 rupees is the current liability now we are paying. So what is the effect? Now we'll see. Let us assume a current liability of 500 is paid. The current asset will decrease by 500 and current liability will also decrease by 500 because we are paying a current liability. We are paying a current liability, so current liability will decrease by 500. Cash is going out, so current asset will also decrease by 500. Current asset decrease by 500, current liability decrease by 500. So new current asset 2000 minus 500 because earlier, presently we are assuming 2000. 2000 minus 500, 1500. New current liability. Present current liability is 1000. 1000 minus 500 is 500. So new current assets 1500, new current liability 500. So what is the new ratio? 1500 by 500, 3:1. That means current ratio has increased from 2 to 3. Presently, current ratio is 2:1. By paying a current liability, the new current ratio is 3:1. That means our current ratio has increased from 2 to 3 by paying a liability. That's it. Second one, to sell a motor car for cash at a slight loss. Forget about slight loss because we need what is the effect on current asset and current liability, not profitability. So when we sell a car, we are getting cash and car is going out. So car is not a current asset, not a current liability. Leave the car. When we sell the car, we are receiving the cash. We are receiving the cash. Suppose the car is sold for 500. That means cash is coming in 500. So current asset will increase by 500. Let the car is sold for rupees 500. The current asset will increase by 500. So the new current asset will be 2000 plus 500, 2500. No change in current liability. Presently current assets are 2000. When we sell the car for 500, we got a cash 500. So our new current asset will be 2500. No change in current liability. Current liability 1000 same. So 2500 current asset, current liability 1000, new current ratio 2.5. Presently current ratio 2:1. Now new ratio is 2.5. So conclusion, by conducting this transaction, our current ratio has improved from 2 to 2.5. Third one, to borrow money for short time on an interest-bearing promissory note. To borrow money for short time, that means loan is taken for a short period, it's a current liability, by a promissory note. When we have taken a loan for short-term liability, for short-term loan, so our current asset will increase, current liability will also increase. Because cash is coming in, we have taken a loan, so cash is coming in, our current asset increased. At the same time, it's a short-term loan, so current liability will also increase. Suppose 500 rupees is the loan. So let the amount borrowed is 500. New current asset is 2000 plus 500, 2500. New current liability 1000 plus 500, 1500. Our current asset increased, current liability also increased because it's a loan, short-term loan. The new current ratio 2500 by 1500, 1.67. So what do you can see here? The current ratio has declined. Presently it is 2:1. Now by conducting this transaction, it has become 1.67. The current ratio has declined from 2 to 1.67 on account of this transaction. Now fourth one, to purchase stock for cash. To purchase stock for cash. What is the effect? When we purchase the stock is coming in, so stock is a current asset. Current asset increases. At the same time, cash is going out. So cash is decreasing. So one current asset increases, the other current asset decreases. So total current assets will remain same. Because stock we are getting, cash we are giving. So stock coming in, cash is going out. Suppose 500 rupees is the value of the stock. So 500 worth of stock coming in, 500 cash going out. So ultimately current asset will remain same. Current liability, no effect at all on current liability. So current ratio will be same. So let the stock purchase be 500. So current asset will increase by 500 and also decrease by 500 because cash is going out. So 2000 plus 500 minus 500, same 2000. No change in current liability. New current ratio 2:1. So earlier current ratio 2:1, new current ratio 2:1. That means after conducting this transaction, the current ratio will remain same, no change. Last and final, to give an interest-bearing promissory note to a creditor to whom money was to be paid. One creditor is there. Creditor is a current liability. The current liability creditor. So we have issued a promissory note. Promissory note is a short-term liability, short-term current liability. So we have to pay to the creditor a certain sum of amount. We have given a promissory note. That means what will happen? A promissory note will increase and creditor will decrease. Both promissory note and creditor, both are current liabilities. One current liability increasing, the other current liability decreasing. No effect on current asset. No effect on current asset. One promissory note is increasing, creditor is decreasing. Both promissory note and creditor are current liability. So let the amount due to creditor be 500. Promissory note given is also 500. One current liability decreases and the other current liability increases. So new current liability 1000 plus 500 minus 500 remains 1000. No change in current asset. So new current ratio 2000 by 1000, that is 2:1. No change in the current ratio. That's all. So in this video, I have completed the last short problem, 16th short problem, and also two main problems. And these two main problems are not calculating. It is only logical problem. You have to think what is the effect on current ratio on these two problems, logical problems. So hope you understood my lecture. You are satisfied. If you are satisfied, give a like to the video. Share my channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge. Give your comments on these videos. And lastly, don't forget to subscribe my channel if you have not yet subscribed. We'll continue the next problem in the next video.